Well, welcome, Practical Finances friends and family. This is Curtis, your host, and I want to thank you for joining me for episode 4 of the fall season. Now, my special guest today is financial and wealth advisor, Lynn Williams. Now, Lynn and I have known each other for about approaching a year, but she quickly impressed me with her investment knowledge and expertise. By the way, what really stuck out at me was her passion to help people. And that's why she's really helped me. She's my personal advisor also. Now, I'm so thrilled to have her on my show again to share this expertise. All right. So with that being said, let me introduce you to her. Now, hello, Lynn. How are you today?
Great. How are you, Curtis? Thank you so much for having me and for that kind introduction. I really appreciate that. And I've enjoyed serving
Problem.
you, by the way.
Oh, I appreciate it. Thank you so much. You've been excellent, and you really helped me. And you turned my investment around when it was going down, and I really love that. Thank you so much for doing that.
Absolutely. Yes. Clients usually thank me for that.
Most definitely, most definitely. Well, Lynn, we're gonna jump right in. All right. The
Okay.
first thing I always like to do is I would like for my guests to humanize themselves, and how they do that basically is I ask them, just tell me a little bit about yourself. Tell me about Lynn.
Okay. Well, it's pretty simple, pretty straightforward. I'm a city girl, born in Queens, New York,
Okay.
where I spent part of my childhood, but I spent most of my formative years in Detroit, Michigan, and the
Okay.
surrounding suburbs. So when people ask me where I'm from, I usually will tell them Detroit. And so wanting to live closer to my family is what brought me to Nashville for almost 12 years ago now. I've been here, and I love it here. I love Nashville. I'm a very proud military mom of two sons. One, my oldest, who is a U.S. Marine and stationed in Japan right now. And
Oh
then
wow.
I have another son who has just enlisted in the U.S. Air Force. So I have a very special place in my heart for those who serve and who have served, and especially the military moms, because I can relate to, them worrying and missing their children. So that's kind of me. I have, 13 years of experience in the financial industry. Um, Most of it was spent in the banking realm.
Mhm.
Some time was spent in accounting because I went to Lipscomb University and obtained a Master of Accounting degree.
Great school.
So that's how I ended up in the accounting field. But I learned that I enjoy serving people and their families more so than, looking at three spreadsheets, of Excel all day, so that's where
You're
my
not a
passion
bean counter.
lies. And
That,
what's
that,
that?
that didn't- you're not a bean counter.
Right.
That's
Yes, my passion lies with people and serving them. So being a financial advisor allows me to merge my analytical side with my passion for building relationships and helping people.
fantastic, fantastic. And again, that's how you and I connected.
That's
And
right.
I can see that. So I'm really impressed. And again, thank you for that. And tell your sons, thank you for their service. Most
I
definitely.
certainly will. I will.
Thank you.
Thank you.
No problem. Well, thank you for sharing that information with us. So, Lynn, what we're going to do is we're going to jump right into some of these questions.
Okay.
Um, First question I have for you here. All right. Um, what is your business investment philosophy, and and how does that guide you in terms of how you guide your clients?
Yes, that's a great question, Curtis. So, my investment philosophy pretty much aligns closely with the firm that I where I work, and it really surrounds buying high quality investments for our clients, diversifying them, and
Mhm.
really holding them for the long term while helping them to reduce risk over time if we have to make adjustments along the way. So, really, my goal when I'm serving my clients is not only to offer them quality investments and services, but to provide them with services or investments that fit their needs and are time tested, with the advice that we give them.
Excellent.
So, it's really, just based on serving the clients with their unique goals, but really
Mhm.
using a long term strategy with high quality investments.
Okay. Okay. So again, you're building. You're not looking for the quick hit, or the quick reward. You're looking for the long. This, in essence, let me say it this way. This is not a sprint. This
That's
is a
right.
marathon.
It's a marathon.
Gotcha. I
That's
gotcha.
exactly right.
Okay. Okay. Fantastic. Now, let me ask you this. During the initial meeting with your client, okay, what is some basic information that you're trying to ascertain in order to put together a strategic plan for that particular client?
Well, really, Curtis, I think it's really important for me to take a deep dive with my clients into their goals,
Hmm.
find out the why behind what they're trying to accomplish, right? Are they trying to achieve, certain goals in retirement
Mm.
by traveling often, or do they want to create a legacy for their grandchildren or children? And so
Okay.
we really start with a deep dive into their goals, so that I can partner with them to create a tailored approach for their unique goals, right? And their unique needs.
Sure.
So everybody is different. There's no cookie cutter approach.
Sure.
Um, However, there is a systematic way that we kind of go about helping the client. And so I basically ask five simple questions,
Okay.
get their input. Where are you today?
Hmm.
That's going to help us determine what their current needs are, what their current situation is.
Hmm.
The second question, where would you like to be? Right?
Okay.
And can we, because answering that question is really going to help guide what their goals are.
Okay.
Right?
Yes.
That third question is, can I get there? What strategies would we need to implement to help you reach your goals?
Sure.
And how do we do it? So,
Mhm.
what is going to be the appropriate mix of investments based on your goals, your comfort level with risk, right, in the market, and
Mhm.
what's your time frame? Some people may have 10 years to retirement, some people 20 years.
Sure.
So, that's going to really guide what we do. And then,
Mhm.
lastly, how can we keep you on track? And
Mhm.
so that's where we answer the question of how are we going to partner together over time, meeting regularly. We meet at least once a year. For some clients, we may meet quarterly, we may meet monthly.
Sure.
But in those meetings, we're determining if we're on track or if any adjustments need to be made to
Mhm.
their portfolio,
Okay.
based on what's on in the market, based on any changes they've had with their particular situation. So
Sure.
that's kind of
Sure.
the approach that we take.
Okay. So on average, with the clients that you currently have right now, um, how frequently do you meet with the clients? I know you mentioned a second ago one annually, but what is your average? Is it every quarter? Is it every 6 months? What are you seeing in your particular business?
Based on my preference, Curtis, it would be at least quarterly because I
Mm,
think
mm,
that's enough to, for us to, and it doesn't have to be a long meeting. Some of those meetings could be 20, 30 minutes. It's kind of just a check in, just to say, hey, let's check the GPS, make sure we're still on track.
sure.
But some clients I have want to meet monthly. Some say once a year is plenty for me. So
Okay.
I really allow the client to guide that frequency based on what their preferences are. But for me, I would prefer with a lot of my clients to meet at least on a quarterly basis, have a quarterly check in just to make sure we're on track.
Okay. Okay. Now I'm going to speak directly to the audience real quick about something that you did for me. We're not going to get into stocks deep today, but
Okay.
I was talking to you. Remember when we were talking about stocks and you listened to what I was saying to you, and within like 2 weeks of our conversations, if I remember this correctly, you actually had sent me a suggestion on a stock, for instance, that I could look into. You
Yes.
sent me a prospectus. You sent that directly to me, and I actually ended up purchasing that stock, which is doing pretty well still.
Yes.
So that is again, talking to the audience, that is an example of the attentiveness that Lynn offers when she is speaking with her client, and that's what you want in a financial advisor, somebody who listens to you and can advise you on different aspects of investment. So just want to share that real quick.
Well,
Okay.
thank you, Curtis. And I really do feel like that's where your advisor should be adding value, listening to you, what's important to you, what are your concerns, and basically what we have, is a lot of tools that are available to us where we can do research. And so often I'm sharing information with my clients just so even if they don't need to make any changes, they're at least in the know, right? They
Sure.
understand what they're doing and why. And so that's really important to me because if you know what you're doing and why you're doing it, you're more likely to stay on track or stay committed to the strategy.
Exactly. Exactly. So in essence, you're not flying in the dark. You actually have a specific plan, or you have a path
That's
that's
right.
lit, that's guiding you on where you need to go.
Absolutely.
Okay. Okay, fantastic. See,
Yes.
exciting. Great stuff. Great stuff. Now, I did a little research,
Okay.
and I saw some information about the different types of investment strategies out there,
Yes.
just general strategies. Can you briefly talk about some of those strategies?
Well, there are so many of them, but I will maybe
Take a
talk
few.
about two or three basic
Perfect.
ones
Perfect.
that
And
a
I'm
lot
sorry,
of
that was
people
kind of
are
a broad
familiar
question.
with.
I apologize for that. But yeah, just a couple to share
Yeah.
with the audience.
So one common strategy is value investing. And
Okay.
so value investing is pretty much for the bargain shoppers out there. Those are the investors who are seeking investments that often stocks. It doesn't always have to be stocks. It could be mutual funds or different, investments.
Mhm.
But they are investments that they believe are priced lower than they should be priced and are likely to increase over time. So
Okay.
these investors are trying to get in when the price is low, so that way they can get a good return when that price increases.
Sure.
And a lot of the times, investing this way takes a little bit of serious effort because you have to research that specific investment selection. So it does take a little bit of time on your part to make sure that you're making some good choices.
Yes, ma'am.
So that's one.
Hmm.
Growth investing is what a lot of people actually employ. And this is the investor that's looking for the next big thing. What's what technology is blowing up right now or getting ready to, the
Sure.
self-driving cars or, whatever,
Absolutely.
right? Whatever the next big thing is.
Hmm.
And so these investors are, basically trying to get in on the ground level or at least at a reasonable level where
Hmm.
they think that they could really make a big return on those investments.
Sure.
And so these are those investments that offer strong upside potential when it comes to their future earnings. And it's not necessarily a reckless or speculative way to invest either.
Hmm.
Again, it often involves a lot of effort, evaluation on the investor's part,
Sure.
and really looking at the current health and growth potential of that particular company or investment, right?
Sure.
And so that's another one. One that a lot of people do with their 401ks, a lot of my clients do, is a investment strategy called dollar cost averaging.
Mm.
Um, and so dollar cost averaging is basically the practice of making regular investments in the market over time.
Hmm.
And I'll give you an example. So a client or could choose to put 200 to 300 bucks a month, in an investment account,
Hmm.
right?
Hmm.
And it's a very disciplined approach of investing
Hmm.
because really it's easier to stick to a plan when you can kind of automate it, right? And
Well,
so
similar to, like, for instance, I invest in 401k at my job.
exactly.
And they take a specific, and in my case, it's 5%. They take 5% from my paycheck every 2 weeks.
Yes.
So I know that amount of money is going into that bucket, so to speak. And then whatever the fund that I have it in will, it'll grow or decrease or whatever. But I have a disciplined approach to growing that 401k. That's is that what
Absolutely.
you're talking about.
That's exactly what I'm talking about. And
Okay.
since you mentioned the percentage, I
Mhm.
always encourage clients to, at the very minimum, if you can't max out your 401k every year because of the advantages with taxes and things like that that you do get, then
Yes.
at least at the very minimum contribute what your company matches, because that's free money that's compounding that you're able to take advantage of. So definitely at least contribute up to the match and get
Sure.
that free money, right?
Yeah.
So to
Makes sense.
speak. But when those investments with the dollar cost averaging is happening, when it through your 401k or through a monthly investment account,
Mhm.
um, what's happening is that you are capturing investments at regular increments at all price levels from low
Okay.
to high, right? And it's the
Okay.
fundamentals are buy low, sell high, right? So
Yes.
essentially, these periodic investments are really lowering the average that you're paying per share of your investments.
Oh,
And so instead of buying, 100 shares of a company at or an investment at $20 a share, maybe
mhm.
sometimes you'll get it at $15 a share, or you'll get it at $17 a share. And the
Okay.
next month, it may be $21 a share. But overall, essentially, what effectively happens is you're paying a lower average over time.
Okay. That makes sense. Okay.
Yeah.
Good strategy. Great strategy on that one.
Yeah.
Um, quick little story. My uncle was in an investment group
Okay.
15 years ago or so. And it was funny when you were talking about trying to find the next big thing.
Yeah.
The investment group, they were trying to determine whether or not they should invest in this. I'm not too familiar with search engine in this little Google company. I don't know what to do with that. And I think at the time it was 30 something bucks a share or something like that. And they
Okay.
said, we'll pass on it. I guess the point of that is I don't think they did enough research.
Yes, and
They didn't,
research is so important.
it's
Don't
just
just
so important. And,
it,
and my next point about that was, so it sounds like you are, you just don't, you would rather the customer have some kind of stake in their own investments. You, and it sounds like you encourage them to do their research. Does that sound right?
I
Not their
encourage.
own, but accompanying research, I should say.
Yeah, so that's fair to say. What I would say though, even to elaborate on that a little bit, Curtis, is that I believe that everyone should have either help or be able to do some research on their own. So either
Gotcha.
way, I don't think you should shoot in the wind, right, so
Gotcha.
to speak. I
Gotcha.
do think though that if you are a person that doesn't have the knowledge, the desire, the time to do the research,
Yes,
then
ma'am.
get someone a trusted professional to help you,
Gotcha.
so that you're making knowledgeable and thoughtful investments, high quality investments. You
Gotcha.
don't want to just play the guessing game, because
Sure.
there,
Sure.
that could be a little bit risky. So
And I was thinking along the lines of kind of working in tandem. You're the professional for
yes.
sure, but I guess let me ask it this way: how many of your clients rely exclusively on your knowledge and expertise, and how many clients are asking you to assist them in their research? If
I
that
would say, if I would have to say, I get about a third of my clients who are just like, Lynn, you take it, and I trust you, you make the choices. I
sure.
have another third who are pretty much very hands-on. They're
Mhm.
calling me, hey Lynn, I'm watching the market. This is what's going on. And
Gotcha.
then I have people in the middle that like yourself, who kind of like to collaborate
Yes.
and do a little research on their own, get some input from me based on the tools that we have here,
Hmm.
and the research that I've done. And we decide together based on their strategy and their goals and risk tolerance.
Sure.
So I would say there's a good mix.
Okay. Okay. That's good. That's
Does
what I
that
want.
answer the question?
That's perfect. That's exactly
Okay.
what I wanted to know. So obviously you have to be flexible
Yes,
and attentive and based on the client and their wants and their needs.
that's exactly right.
Oh, okay. Okay. Well,
Yes.
thank you for that. I appreciate that. Well,
Yes.
let me, this is about what happens to my money if something happens to me in that
Yeah.
case? What are some strategies or what can be done to kind of to safeguard that money that's invested, for instance?
Yeah, so that's something that we should all be thinking about, right? I mean, it's not always our favorite topic to discuss, but if there's anything that we can depend on, it's death and taxes, right?
Yes, ma'am.
Right. And so that is something that I discussed with all of my clients as a part of their strategic plan. Who do we want to designate as beneficiaries? Is it a spouse or a partner? Is it your children, your grandchildren? Is it a favorite charity, right?
Yeah,
So we really want to be very thoughtful at the approach, not only why we're doing it, who are we doing it for? What is this money supposed to do for you, both now and when you're gone?
sure.
I also love collaborating with their other professionals. So if they're working with a CPA on their taxes, to help reduce maybe some of the taxes that their beneficiaries would have to pay when assets transfer to them, or if it's their estate planning attorney that helps with their wills and their trusts. I
Mhm.
like to collaborate with those individuals to make sure that we're leveraging everyone's skills, to help put the clients in a better position of success when it comes to their goals,
Mhm.
at avoiding probate or employing tax efficient strategies, for their beneficiaries, things like that. So we really just want to employ not only making sure we have beneficiaries set up, but maybe making sure that we protect your plan with life insurance, even when you are alive, long term care insurance, things like that. We want to do things to protect your plan.
Now, do you collaborate in terms of the life insurance portion? Do you bring in a trusted partner for that, or is that something that you offer, or how's that work for you?
That's something that I offer, but what I always tell my clients is that I am a life insurance broker, right?
Mhm.
So I'm not partial to any specific company. We don't have proprietary companies that we deal with. We have several, companies that we can work with, and several different that offer several different options to make
Mhm.
sure that that plan is doing, or that policy is accomplishing what you need it to accomplish at the best cost,
Sure.
for you. So I'm not partial, and for everyone makes it may or may not make sense depending on what their specific situation is. So,
Gotcha.
but that is something that we discussed.
Gotcha. Okay. Okay. That does make sense. Okay. Thanks for sharing that. I just wanted to let the audience know what you do.
Yes, no, I
And what you can
appreciate that.
do. Well, let me ask you this. Also, kind of going back to specific investments, and your strategy.
Mhm.
Um, can you elaborate what happens or on what the meaning of balancing your portfolio means? What does that exactly mean? It's kind of a buzzword.
No, well, I'm glad that you brought that up, because that actually takes me into something that I wanted to say about investors that I realize are really effective, really highly effective in their strategy. They
Mhm.
have specific habits, and one of them is that, so I would say there are five, right?
Okay.
Number one, they're very goal oriented,
Mm.
right? So they set goals, and so that way they have a blueprint for what they're trying to accomplish. You have to start there, right?
Yes,
And
ma'am.
then they are um, people who like to regularly check in, right? So they are, meeting with me on a regular basis, like we have planned, to say, okay, am I on track? Do we need to make any adjustments? Have I made a wrong turn? Or, so we're doing regular check-ins by meeting regularly, like we discussed before.
Yes, ma'am.
Then they diversify their portfolio. So they follow, our advice that, stronger portfolios are well diversified.
Mhm.
And that means that there's a good mix of investments. We're
Okay.
not just talking about, stocks may not be for everyone.
Right.
It could be mutual funds, or bonds, or bond funds, or whatever it is. There's so many different investments out there. And so what we want to do is to make sure that you're well balanced and you have enough cash on hand for the unexpected and to also balance out your portfolio.
Mhm.
Um, Another thing is that um, they have time on their side. So it's when you talk about a balanced portfolio, if
Mhm.
we are, in a certain percent of equities versus fixed income and cash investments, it shows over time that those portfolios work well over time, even during downturns in the economy. So I have a statistic here
Okay.
um,
Okay.
that I wanted to share, and
Yes,
it
please.
says, yes, and it says here that when viewed on a yearly basis since 1976,
Mhm.
the stock market has been positive 82% of the time.
Mhm.
However, a balanced portfolio containing 65% of stocks, 35% of bonds, and really when we say stocks and bonds, we mean different equity investments or different fixed income investments, right?
Mhm. Yes.
But when they're viewed over a 5-year time frame, they've been positive 99% of the time. So it's
Uh-huh.
really about having a good allocation um, in your portfolio, and not being all in stocks or all in any one type of investments to make sure that you have some type of buffer when we do have fluctuations in the market. So that's what we're talking about when we say a balanced portfolio. And
Okay.
then lastly, I like to say focus on the fundamentals, not your feelings, right?
Mm. Okay.
Because the media really their number one job is to really get us riled up, to get our attention, to get ratings. And a lot of the times things are not always as bad as they seem,
Sure.
but even when they are as bad as they seem, time has shown that if we stay disciplined and we stick to the strategy, maybe making tweaks where we need to,
Mhm.
and we stay cool, we'll usually be okay in the long run.
Sure.
So those are some habits of highly effective investors that I've seen. This is an article that I'm happy to share.
Yes.
You know, from my firm, written by my firm,
Okay.
based on research and data that can be researched and verified. But it's called Five Habits of Highly Effective Investors. And I'm happy to share that with anyone who'd like to read it.
That would be fantastic. We can set that up to where we can, I guess, establish a link or something of that nature and just share it when I post this particular video. Will that work for you?
That's fine.
Okay. Okay. So what you're saying is to kind of tie that up a little bit here is a balanced portfolio is essential.
Yes,
How you in terms of tweaking that, you tweak the percentage of the different kind of investments in that particular portfolio over time.
that's
And
right.
have all mutual funds, bonds, stocks. You just got to make sure that you may have 65% in one and then 20% in the other, and my math is often 10 or 15 in the last one. But then you can change those. But it's a non-negotiable to have a balanced portfolio or different kinds of investments in that portfolio. Am I reading that right?
Yeah, time has shown
Mm-hmm.
and data has shown that having a balanced portfolio performs better over time, or usually performs at an increased rate over time. And I don't know if increased rate is the proper term that I'm using, but it performs at a better rate over time,
Gotcha.
um, based on being balanced that way.
So let me ask you a quick question here. All right. So can we do a quick comparison between mutual funds and stocks?
Okay.
Just what's a benefit of the mutual fund as compared to just looking at stocks? Can you clarify that for us?
Yeah. So there
Uh-oh.
for the investor. And again, I think that you want to have a mix, if if it makes sense for your particular situation. But the difference in a stock, and what I like to say is we don't sell or offer stocks, we offer companies because we want to sell high quality investments. But you are basically you're taking the risk on for that one particular company, right? So if that company does well,
Mhm.
then your investment is doing well. But if it's starting to lag a little bit,
Mhm.
then then your investment is lagging, right?
Yes,
However, with a mutual fund, you're invested in a pool of stocks.
okay.
So it's like, having the 31 flavors of ice cream, right? And when some of those ice cream flavors aren't selling well, you boot out the ones that aren't selling well, and
Mhm.
you mix it up with something that's more favorable to the buyers, and so or more favorable to the company itself overall in terms of what's going to get them a better revenue or profit.
Sure.
um, and so that's the difference with just being in one stock. You're just taking on the risk of that one company, as opposed to being in a mutual fund. You are basically diversified into
Mhm.
several different stocks. So you have more of a balance that way, more of a diversified portfolio, and you have someone, a manager is what they call it, someone
Mhm.
keeping an eye on it for you, that's watching the performance and making changes as needed to improve the performance of that fund.
So when you invest in a mutual fund, so a whole bunch of different stocks that are in one fund. So if some stocks are doing well and other stocks aren't doing well, it doesn't matter because they kind of balance each other out. Is that correct?
Correct.
Gotcha. Okay.
And there's still other factors to consider. How long has the fund been in existence? How many fund managers do they have?
Sure.
How much experience do those managers have? So there are so many different things, that we consider, that we don't, have the client worry about. We do that research to make sure that we're investing in, high quality funds for our clients.
Excellent. 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 Sure. Sure. Well, Lynn, listen, I want to thank you so much for sharing your expertise with the audience, letting them know about investments and investment strategies. As I said, audience, she is fantastic and she is extremely knowledgeable. And I try to when the people that I bring on the show, they're top notch, high quality people, and Lynn, you are one of those, and I definitely appreciate that. If you
Well,
don't mind,
thank you. You
Lynn,
are too kind.
not a problem. Well, how can one get in contact with you, Lynn?
You can call me at my office.
Okay.
Office phone number here is 615-444-8781. Or
Mhm.
feel free to connect with me on LinkedIn or email me
Okay.
at lynn.williams, the
Mhm.
number three, at edwardjones.com. So
Okay.
again, that's Lynn with one N, Lyn dot Williams three at edwardjones.com. And I'll be happy to set up some time with you to discuss your questions.
All right. Fantastic, Lynn. Thank you for sharing that information. Again, thank you for being on the show today. We definitely appreciate it. I know you're a very, very busy person. And again, thank you for taking the time to sit down and talk with us and just, as I say, educate the world on
Thank you.
investment.
That's what I love to do.
Fantastic here. So, again, thank you, Lynn. Now, please join me for next week's show. Specifically, this is going to be episode 5 when my special guest is going to be Legal Shield Advisor Michelle Shulman. Now, our discussion will be about the importance of establishing wills. Now, I definitely want you to join me for that important discussion. Now, if you want to contact me, please email me at curtis@practical-finances.com, or you can follow me on various other social media platforms. On Facebook, which is Facebook at practical_finances, on Instagram, which is at practical_finances, or on YouTube, which is YouTube/practical finances. Again, thank you for joining me. I look forward to seeing you next week. And until then, be blessed. day.